And Professor of Economics and Public Policy at the University of Michigan, Justin Wolfers, joins me now for more on this. And Professor Wolfers, despite the headline on job growth, the unemployment rate is trending higher, now at 4.4%. And just today, Verizon announced that it's slashing 13,000 jobs. Is there cause for concern about a weaker labor market here?
There's no question that there's cause for concern. The labour market has been slowing for quite some time. At some level, that makes sense. It might have been moving a bit too fast in the past. The question is where it comes down and steadies out at. And the problem here is that we've now got unemployment almost up to 4.5%. It is, as Alexis said, the highest rate in 4.5 years. So if you asked me for the one single number that best summarises how people feel about the economy, it would be the unemployment rate. And so when you hear from regular folks that they are finding things tough out there, this higher unemployment rate, I think, really starts to speak to that story.
Well, and Professor, we just heard from Alexis, who was mentioning how the Fed will have to make its decision on whether or not to slash interest rates in December without fresher data. But I'm curious, looking ahead to next year, what is your economic outlook right now?
So I think there's a shoe yet to drop. The president has been talking about tariffs all year, but the reality is, you remember he announces tariffs and then he says he'll have a pause for a while and then he'll re-announce them and then he'll pause them and they're on and off and on and off and on and off. So now they're on. And if the Supreme Court doesn't strike them down, and it may well still do that, then we're going to see it's reasonable to expect the effects of those tariffs starting to slow the economy. The problem is, yes, the economy is growing, but no, it's not growing gangbusters. And so next year's economy is going to see two big things happening. It's going to see the tariffs hit, and it's going to see an enormous slowdown in immigration and in population growth. How hard those two factors hit the economy is the open question, and that will determine whether that turns out to be a recessionary year or not.
Well, and you mentioned how tariffs could impact the economy, also immigration and the slowdown in population growth. Could that be offset at all by the Fed deciding to slash rates in December?
Look, the Fed can do a lot of things, but what it can't do is lower the price of imports. It can't make it so there are more workers for California farmers to help pick the crops. Those are very direct and real shocks. They're what economists call supply shocks. They make it more expensive and more difficult to do business. The Fed is in a much better position to offset what we call a supply shock. When we all lose confidence and we stop spending money, the Fed can restore confidence. If you want to eliminate these supply shocks, rather than hoping the Fed can do it, and the Fed cannot do it, the best thing to do is reverse them. If you're worried that tariffs are going to do harm, don't wait for the Fed to offset the effects. Just get rid of the tariffs.
All right, Professor Justin Wolfers, thank you so much for your time.
A pleasure.